Alrighty, so we are coming into the end of the year, and of course, as we approach the end of the year, many people are asking, oh, is it a slow time? Not as many clients come in, which is true because they're off, traveling and now visiting family, but it's actually a pretty busy time for us, and there's a lot of things that we're trying to do and keep track of. And so I know, really two things that we do, especially towards the end of the year, is look at tax loss harvesting and watch out for capital gain distribution. So maybe you can speak to both of those things and what we're doing proactively for our clients in preparation.
Yeah, it sound like real fun, exciting topics heading into the holidays, right? But but it's good. People want to save money on taxes, and so from an investing standpoint, this is the work that basically we do for clients going into the end of the year. So it keeps us very busy. Number one is that we use mutual funds, we use exchange traded funds or ETFs. These are things that are often in a client's investment portfolio. So step number one is that we're looking for mutual funds that are paying out distributions towards the end of the year. And when you're in a growth market, then that happens.
And not to be confused with selling a mutual fund, because when you sell a mutual fund, if it grows, you pay capital gains. But we're talking about if you just hold on to the fund, the mutual fund itself may spit out a capital gain to you.
Right, and so you really have very little control over this. So what we do is we go through all the different mutual funds that we may use or that clients may own, and we're trying to pick out especially the ones that are distributing large gains. And
they're releasing those estimates usually around this time.
So we're really getting started in those types of things. And we're trying to identify those funds that are releasing large distributions and then ask the question, is there something we can do about that? Can we avoid the gain somehow? And it's different for every client, so it becomes a very unique process.
One client, it may make sense to sell. Another client may make sense to hold just because of all the different tax ramifications. And the other important thing too is that just because you're selling a fund to avoid that capital gain distribution, it doesn't mean you have to sit out on the market. Right? You can still continue to stay invested in maybe a similar ETF or a different mutual fund, right?
Yeah, if we can avoid a gain and then go back into to buy something, a substitute, and then go back into that fund later, we have to wait 30 days. And then
those
we can
wash sale rules is they're commonly referred to as. So then the other thing I know is tax loss harvesting. Right.
So fancy name, and basically what that means is, do we have any losses in the investment portfolio? Which does happen, and in a diversified portfolio, there's lots of things that are doing well in a good market, but maybe you have some things that you just bought recently and they've gone down, or it just could be a timing thing. The other thing is from like an investment that has a loss, it doesn't even really mean that you lost money in it. It just means that you've already paid enough tax on the dividends or whatever else to increase that basis. So all that to say, we're going through client accounts and looking at, are there any losses that we can capture to maximize the return, which may not show up on paper as performance, but it's saving taxes.
It's kind of like turning a negative into a positive in some cases, right? You may have an investment that, to no fault of the investment, it just hasn't been performing as well, but we're going to take that negative performance and we're going to turn it into a positive by capturing that loss. And you can deduct up to $3,000 of losses on your tax return, and anything more than that you can continue to carry forward into future years. So it's really a benefit that many people miss out on and don't pay attention to.
And oftentimes those losses, the most important part is that it's offsetting other gains. So that's what we'll be busy with over the holidays.
So we'll be keeping busy. If you'd like, help in this area, if you'd like connecting your finances with your family and your values, give us a call, visit our website. We'd love to talk with you.